The morning report for the 23rd of July 2009. The Nasdaq rose on Wednesday for the 11th straight day in a row with a buoyed solid profits from Apple and Starbucks. Interesting combination. While the banks disappointed in the US and declining energy shares weighed on the broader market. So what we saw overnight was the Nasdaq was up 0.5%, but the Dow Jones and the S&P 500 were both down. Dow Jones down 0.4 and the S&P 500 down 0.1. Keep in mind the Nasdaq generally relates to retail type stocks in the US. So we also saw the FTSE up slightly, up 0.3%, and our market closed up yesterday, up 0.44% or 18 points to close at 4,068. Obviously, the concern there is declining results in the banking stocks and the energy shares. Now, these stocks are a heavy part of the Australian market. As such, if we see poor results coming through in the earnings period coming forward, we should see, obviously, the stock market pull back a little bit. Again, this is a good opportunity to pick up some shares and certainly an opportunity to add to your portfolio. Now, there's two schools of thought at present on the marketplace. This first of all is coming through from Goldman Sachs. They are expecting to see the market fall further, and they are expecting to see a bottom in the market around in 2010. Now, this is obviously contrary to other brokers out there, and certainly contrary to what our head office is coming out with at this point in time. My view is I think the market has bottomed for now and prices are cheap. If you look back over the last four bear markets, when you get dividend yields around 8%, it certainly does mean if you have a long-term view, you will do quite well out of buying those shares. It generally does mean the market has underpriced the stock and panic has set in. Now, we saw that happen with the banking stocks in the lows in March this year, and certainly I think it makes a buying opportunity now a good opportunity to buy more shares now at these low prices. Keep in mind though, you need to have a long-term view. So you need to have a 3 to 5 year outlook. If you really are trading or if you are concerned about short-term drops, perhaps now it's not a great time to jump in. But then if you've got a 3 to 5 year term view, you will make good money coming out of this bear market in a couple of years' time. So keep that in the back of your mind when you are looking to invest and sitting on cash. I don't think cash is a good place to be sitting right now. I think you need to get that money back in, invested in the marketplace. I think the economy is starting to turn, and certainly I think now is a good time to take a long-term view. Now, in other news, we saw the gold price move up 0.7% to close at $953 an ounce. Oil was down 0.4 to close at $64.50 a barrel US, and the Australian dollar was pretty much steady, just sitting at 81 US cents. For more information, go to our website at growyourwealth.com.au.